Morning, traders. My name is Frank Chali. I'm a senior market strategist with RJO Futures here in Chicago. And today is Monday, September 14th. I'm here with your weekly update on the equity markets. In the outside markets, the dollar is up a little bit. It's traded both sides of unchanged. The metals are kind of mixed. Silver's a little easier. Gold slightly positive. Treasuries are trading a little higher. And currently the S&Ps are a little weaker on today, about 6 1/4 lower. We would expect that today, due to the Rosh Hashanah holiday, that we're going to have lighter volume. And it seems evident early this morning that's true. It's very quiet. Also, later in the week on Thursday, we have the expiration of the September equity futures, and we have the FOMC announcement. Now, that's really what has the S&P market, at least in my opinion, in a holding pattern right now, is waiting for this announcement. We have interest rates way too low for way too long, and I think it's time that we see a rate hike. This is just my opinion. There's a lot of people out there that say the Fed is still going to hold and we're not going to see a rate hike yet. I think a rate hike, a 1/4 point, the economy can handle it, and it would be a vote of confidence for the economy to show that, we are stronger than the rest of the world, regardless of what's going on with all the other central banks. We should start to move towards a more normal monetary policy. I think that we will see a small rate hike, and I think that the economy can handle it. Now, the market may have a negative reaction. I would expect that if we do get this rate hike, we get a sell-off, we retest those lows, we see how strong the market really is, and perhaps later the market has a recovery bounce as it realizes this has been long overdue and it's good for the economy in the long term. So a couple things you want to keep an eye on. We do have a big choppy consolidation range right now. On the upside, there's some good resistance right around 1990 to 2000. On a closing basis above that 1990 or even 2000 level, the market starts to get bullish again, but it's not really strong unless we get a close above 2035. On the other hand, if the market moves lower, a close below 1900 or even 1892 is very negative, and then we should revisit 1850, 1830 level and see if the market can hold those levels or not. Longer term, it does feel like the market, at least technically on the charts, is somewhat weaker. I would expect that we test those lows and perhaps move a little lower, even into the 1700 handle for the S&Ps. That's all I have time for now. Please feel free, shoot me an email, give me a call. Thank you. As always, remember that trading commodity futures or options on futures involves substantial risk of loss and is not suitable for everyone.